Today, I want to talk about how the shorts are running out of time. They've lost hundreds of billions of dollars so far this year, and it won't be long until they're liquidated, not just on their AMC positions, but on their entire portfolios. So stay tuned and let's make some money. Today's Christmas hat is a little different because today I'm an elf. But now I want to dive straight in with the key information. So, Cheddarflow tweeted saying, fun fact, short sellers have lost close to $178 billion in 2023. Now that information is according to Yahoo Finance, who very interestingly attached the following chart. So this chart shows the top losses for short sellers in 2023. Some of the names on this list are expected, but some are quite interesting and surprising. So up at the top, we've got companies like Tesla, Nvidia and Apple, where short sellers have lost tens of billions of dollars on each of these companies. But interestingly, on this list as well, we also have stocks like Coinbase, Carvana and others like Affirm and Shopify, those heavily shorted names. As a prime example, these shorts have lost nearly $4 billion on Coinbase, over $2 billion on Carvana and $1.5 billion on Affirm as well. So on the whole, we can see even though the shorts have made money in some locations, overall these shorts are down bad, losing nearly $200 billion net. Now, why does this mean the shorts are running out of time? Well, obviously, as these stocks continue to move upwards, these shorts get closer and closer to being liquidated. But also, as Pip and Sammy has explained, because these shorts have doubled down, tripled down, quadrupled down and septupled down on their short positions, actually they're even closer to being liquidated on AMC as well. So they've tweeted saying the lower AMC goes in price or the more AMC is pushed down, our buying increases shorts liability and makes finding a way out even more impossible. He said if and when AMC goes up, shorts will be forced to close out of their short positions, and therefore we're winning every single day. So I've drawn out on the whiteboard exactly how that looks and exactly how the shorts are getting closer and closer to liquidation every time they double down. So let's first imagine that prior to June 2021, no short seller had ever shorted AMC ever before, just to keep the numbers simple. I know that's obviously not true, but I want to try and keep the numbers as simple as possible. So let's say these short sellers started with an average short position of $70 per share and an average liquidation point of $140, which is 2 times their entry point. AK, they started with a non-leveraged short position, and if that short position goes up by 100%, obviously their entire capital is drained and they end up liquidated. But then the shorts took on some leverage and they doubled down, shorting AMC further to bring the price down to $35 per share. That would also average down their liquidation position in a non-linear way too. Instead of needing 100% losses to be liquidated, they now only need 50% losses to be liquidated. So instead of taking $35, their average short position after they've averaged down, and multiplying it or increasing it by 100% to be liquidated, you now just increase it by 50%, so $52.50. But then as they doubled down again, doubling down for that third time, it averaged down their short position and pushed the price down to an average short position of $17.50. But now as they're even more leveraged, AMC can increase by a smaller percentage, still bringing them to that liquidation point. With an average short entry of $17.50 after averaging down, they may have been liquidated at $21.88. This is obviously something I speculated on a long time before the reverse split, when AMC was bouncing between $20 and $30, never closing above $30 for a single day, only having a quick run up before then being pushed back down. And again, as they doubled down, tripled down, quadrupled down and septupled down time and time again, their average short entry point just got lower and lower and lower. Obviously, at some point in here, we would have had the reverse split as well. But let's say that right now, after averaging down so many times, the average short entry point or an average down entry point is at $10.95. But because these shorts are now so heavily leveraged and have so many billions of dollars in this short position, that may only put their average liquidation point at $11 per share. As a prime example, if any of you have traded crypto or forex on crazy high leverage rates, you know that even a small movement in the stock or crypto or forex's price can cause liquidation. For example, let's say you enter a crypto at $10 per coin using 100 times leverage. That crypto may just have to increase from $10 to $11 and you end up liquidated. This being the prime example with AMC as well, so AMC may only have to run from $6 or $7 up to $11, causing every single short to be liquidated, especially as they're already down nearly $200 billion so far this year. We also had another great trade today in the Millionaire Mindset Trading Group, this time on NXTP or Next Play Technologies. In the pre-market, I alerted to the team that a break of this pre-market high of $2.85 would send the stock higher. But I also pointed out this massive increase in volume on this candle here at 10:28 AM, where many of the team like James jumped on for a whopping 60% profits. Mr. Mo also locked in 25% on NXTP, which ended up running a total of 67.4%. So if you guys want to be jumping on these daily 60, 100, 300% gains with a 100% money back guarantee if you don't make a profitable trade in 30 days, be sure to join the Millionaire Mindset Trading Group linked in the description below. And now that has really got the shorts and the shills riled up, and they're trying to do everything possible to convince you to sell, even going to the very depths of tiny dilution to try and spread fear, uncertainty and doubt. Now you all know my thoughts on dilution. I don't like dilution because every share sold to these hedge funds is a share less they have to buy from us. When Adam Aaron was diluting by 30, 60, 100 million shares, I wasn't best pleased. But now these shills are trying to spread FUD even over the tiniest minuscule amounts of dilution, like 400,000 shares. This only increases the float by like 0.5% of the entire float, but the shills are trying to pretend like it's the end of the world. Remember the time back in January and June of 2021 where nearly 1 billion shares traded in one singular day? 400,000 shares would be bought up by retail investors and other institutions in probably about half a second in a squeeze scenario. While I wouldn't be happy if Adam Aaron again decided to dilute by 100 million or 200 million shares, 400,000 shares is a minuscule needle in the ocean. But yet those accounts out there with 0 followers are still trying to tell you that AMC has too much debt and too much dilution, and that the squeeze will never ever happen. Trying to convince you that shorts aren't in trouble even though they're down over $178 billion so far this year. And quite literally begging you to sell, even though these accounts have been created moment ago by fake bot networks and fake shills. Now, the one thing I do agree with in this message is this part at the bottom where it says it's okay to take a loss if it means surviving. Obviously, essentials like food, water and shelter are more important than holding every single one of your shares. If you are in a stress situation, especially in the cold weather and especially in the holiday period, you need to survive. As I've always said on this channel, never invest more than you're willing to lose, and that goes for all investments, whether it's AMC, GameStop, meme stocks, Apple, Tesla, Amazon, Nvidia, whatever stock you're buying, only invest the amount you're willing to lose. Now, America has also tweeted an extract or an excerpt from Elon Musk from a recent Spaces call. Elon Musk said in a class action lawsuit, the media will often write that the plaintiffs are aggrieved or aggravated shareholders. But those shareholders are puppets and the real plaintiffs are law firms representing some entity who wishes harm on that company. You may have seen yesterday I gave that prime example with POL or Polish.com. Apparently an aggravated shareholder wanted to sue the board and have a position on the board so he could crush the company, just holding 2 shares. That is obviously a paid plant, a paid shill, a paid informant trying to infiltrate the company to destroy the company from the inside out. And that is exactly what these shills and shorts have tried to do time and time again with AMC with their phony lawsuits. Trying to get shareholders that hold 10 or 16 shares to sue the company, feeding them hundreds of thousands and millions of dollars to try and get a spot on the AMC board. Again, now these shills and shorts are trying to convince you to throw out Adam Aaron so they can replace him with a paid plant, a paid shill, a paid informant to crush the company from the inside. It wouldn't surprise me if Adam Aaron is kicked out, he'd be replaced with someone directly from Citadel. Or if it weren't Citadel or Virtue, more than likely it'd be somebody from the Boston Consulting Group who even tried destroying GameStop. Finally, Pip and Sammy tweeted saying Bernie Madoff was arrested December 11th, 2008. The markets had been tumbling for a few months, financials even longer. Saying an arrest of Ken Griffin is not beyond the realm of possibilities at all. Doug Sifu either, and during the holiday season. Many of you will say, well, Tom, Ken Griffin pays off Congress and the Fed and the SEC, so surely he'll never be investigated and never be arrested. Which I do agree with, but also remember that Bernie Madoff also paid off the Fed, the SEC, and those politicians too, and was also never investigated. It wasn't until his entire hedge fund was just a mere few hours away from collapse that did he finally come clean. Now, I don't think Ken Griffin, even just a few hours before collapse, would he actually come clean. But when Citadel does end up collapsing, the SEC, the Fed and those politicians will have no choice but to arrest him and imprison him potentially for life. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.